Hello guys, welcome back to another lovely trading video. In this one we're going to be doing some in-depth stock analysis on SGMA, which was one of the leading gappers of today. Before this is where we did upload analysis on Moderna, so if you want to check that out, it would have been uploaded before this. Now, you will see that QTT looks like it was up around 800% a day. Some brokers this would have shown, some others it wouldn't. Reason for this massive move is it wasn't really an actual move, it was a reverse stock split. And that's why the easiest way to tell if a stock's done a reverse stock split is see where was it previously. So we can see it was around $40 cents, sorry. And then when it opened, it was around $4. So when you see this, you know, okay, it was a 10-to-1 reverse stock split. You don't really need to do anything, and that's why you'll notice, well, on most of these stocks when this happens, if you go onto a one, or if you're looking at it intraday, the volume's dead and the stock doesn't move because it didn't actually ever move in the first place. So I just thought I'd note that just in case anyone was curious to why it was like that. Now onto SGMA. Firstly, we start off on a clean daily chart to see is there any gaps that need to be filled, because more likely than not they will get filled, so we can use them as price targets. And looking straight at this, there doesn't really seem to be any gaps that need to be filled, so we can skip this then and go straight onto the standard deviation chart. This stock was very bullish today. I mean, it even closed very near to the high of the day, which is not something you see very often, so that could be a sign of continued momentum coming into the new week. But doesn't take into but that still means we have to take into account though the standard deviation levels. So we will place all these because these are levels where we expect strong movement. Doesn't mean they're going to go higher than this, doesn't mean they're going to go lower than this. It just means these are areas which we can basically use as support and resistance. So if we go back onto a kind of a 5-day 5-minute, or 5-day 5-minute, you'll see how these levels firstly reacted intraday. You can see it came into the first deviation, pulled back quite heavily, and this is how I personally trade these small caps, is just shorting the initial touch of these levels, because I mean that pullback alone was around 8%. So depending on how you trade, you'll use these levels differently. And we broke through. One thing we didn't see is a retest, and when you see this, it usually means momentum is very strong, because 9 times out of 10, for example, on this when it broke this level, you usually see the stock come back, retest before continuing higher. If you don't see this and you just see the stock continue to the next level, that is a very big insight into how strong the momentum is. So when it does finally give a pullback, it can be a good sign to maybe get long if it's part of your strategy. But yeah, looking at it, it already came into its top deviation level, which was $18, and that's the 4th deviation on the 4 hour. And you will see that's why kind of the stock is halted. Not halted, but you're kind of like consolidating in this area, because it's going to struggle to break through here. However, if it can break through, we don't have really any upside targets. So that's one of the things with stocks when they're this extreme as well. If the momentum does continue on, we don't really have any upside targets, just because it's just extreme risk. Usually when the stock's trading out, if a stock can close outside its 3rd deviation, which it has, then it's instantly a large risk to trade, because you don't see it often, and when you do, it means it's extreme momentum. So it's a risky one to short, but it's also a risky one to get long, because when it does crash, it will crash heavy. So the reason we provide these levels is if we can't give any targets to the upside, you can instead use these levels to realize when momentum's most likely dying. So what you will probably see if the stock starts to fall down is once we come into kind of this $16 level, what we would like to see is it kind of break through, come back, retest this level, and once we get rejection, then that will most likely be our confirmation that the stock's going to continue down. And if you're a short bias trader, that can be the way to trade short. Now, if you're a long bias trader and you still want to use these levels, as we've already used all these levels, we can use them more as quick scalps. Probably wouldn't hold them for longer moves, but they would probably work quite well for scalps. For example, coming into here, you'll get a bounce most likely at the $16 level to maybe $16.25 to $16.50, and you can just get those small scalp plays. Same thing coming into the $14 level, same at the $12.25, same at the $11.88. Kind of all these levels you can expect to get these small scalp plays if you're looking to play long. If you're looking to play short, again, we just want some confirmation that it's going to continue down. But that's really the overall breakdown on SGMA. as it's closed outside of its Thursday deviations, we can't really even give insight into whether it's going to continue up or down coming into Monday, because it is showing extreme strength. So it wouldn't be unlikely to see it continue higher, and if it does, something again we wouldn't be trading long, just because then it's outside of all realistic kind of prices. So if you're buying here, more likely than not, you're going to lose money, or at least how I trade, it's something I just see as you're more likely to lose money than you are to make it. And whenever it trades like that, it's just unnecessary risk, so what's the point of taking it? But so I hope these levels will help you coming into Monday and the rest of the week. So hope that helps. Hope to see you in the next one, and that's it. Peace.